The flavour of this board decision statement and the rhetoric from the governor suggests that they're more alert to upside inflation risks and they're more concerned around the persistence of prices, particularly in the services economy. From that, we think that there is some risk that rate relief might be delayed, and in fact, markets pushed out the timing of a rate cut from early 2025 to April 2025. We are still of the view that the Reserve Bank will deliver a rate cut in November, but the data will be very important, particularly around inflation and jobs data. The next time the Reserve Bank meets will be in August, and just ahead of that meeting, they will get the quarterly inflation read for the June quarter. That report will be very critical. Some analysts believe if that's an ugly inflation number, then that throws up the possibility of a rate hike. We are still leaning to the view that if it's an ugly number, then they're more likely to keep the cash rate on hold for longer. Our inflation forecasts are below that of the Reserve Bank, so we're still comfortable with our view that they will deliver rate relief later this year, although obviously there's a greater risk now that that rate relief might slip into next year.